I wanted to have this conversation today with Tony Ruff at Movement Mortgage. My name is Heather Witte. I'm the owner of the Witte Group at eXp Realty. And Tony is the branch manager at Movement Mortgage here in Austin, Texas.
Yep.
He and I were talking about the CARE Act and some of the benefits for homeowners there, but then also a little caution because there's some unknowns happening right now with the CARE Act. Is that right? And the forbearance?
Yeah, so the CARE Act basically has been enacted to help people who have been affected by the COVID-19 with either, loss of job, most importantly, and how they're going to navigate through, these financial times that we're all going to experience. And so I think, understanding the forbearance piece of this is our goal today, just to kind of talk about what that means.
Absolutely. Absolutely. So why don't you explain to everyone what is forbearance under this CARE Act, or what is forbearance when you're dealing with a loan in general?
Yeah, so it's important to know that forbearance is not forgiveness. So any mortgage payments that the way the CARE Act reads is that you can opt in, you can affirm that you've been affected by COVID. You do not have to affirm or prove that you have lost your job. But once you do that, then you can forego or enter into forbearance on your next 6 payments of your mortgage. So the issue with that comes in that these payments will have to be repaid. And so that is where the big question mark is will they be tacked on to the end of the note? Most likely not.
So 6 months, you call in, you say, hey, Wells Fargo, hey, Chase. Does it matter who you're calling, or is it just anyone who is servicing your loan?
Yeah, so all servicers, based on, if somebody calls and wants to enter into this forbearance on their mortgage payment, they are required to comply.
Okay, so that's great. So then that's 6 months. What happens at the end of 6 months and you're still having difficulties?
Yeah, so you can opt in for an additional 6 months. It's a total of a 12-month period, so it's just in 6-month increments.
Okay, all right, great. So anyone can opt in. What happens at the end of the forbearance period?
Yeah, so you got to understand that we're dealing with an enormous amount of people, thousands of people entering into this unknowing about how this is going to be repaid. And so that can change based on the servicer that you are with or any agreements that you guys are signing or have in place for this. So that can either be a balloon payment. So at the end of 12 months, if you had a $2,000 mortgage, then you would owe $24,000.
Like right off the bat, just be like, here, write us a check for $24,000.
It could be this, yes. Okay. I'm not saying all people this would be the answer for everyone, but yes, it could be this. It could be, a 50% increase on your mortgage payment currently, right? So, where they're getting
spread out over time.
Spread out over time, right?
Okay.
An additional payment spread out over time, or the talks are that it would be tagged on to the end of the note, whether it be a 30-year or 15-year note, that you would have those at the end of the things. But that is least likely to be the case.
Okay. And I know a lot of people are thinking that is going to be the case. And you were talking about the numbers and why that really wouldn't work for a lot of these servicers.
If a quarter of the people with mortgages out there right now jumped onto this program, then we're talking about right out of the gate, $70 billion worth of payments not being collected over that number, a quarter of the people not making their mortgages. If that were to extend into an additional 6 months, you're talking about $140 billion, again, of payments not being received. And with the servicing companies, they're still obligated, which there are still talks in the government about how they're going to help the servicers in all of this, because they've laid out this program without a true plan in place. So, but right now, those servicers do have to make those payments, whether they're collected or not, to the investors, mortgage-backed securities. So
simply tacking everything on the end of a 30-year note isn't really going to benefit.
No. So this is an industry.
So they're going to need it repaid, and probably sooner than later.
Correct. Yeah. And so this is an industry in the servicing. When we talk about the servicing arm of the industry, this is an industry, and last year it grossed roughly $10 billion total. So the numbers are, there's no plan for what we're talking about.
Okay. All right. So people really need to take into account that if they're thinking this is just going to be tacked on to the end of their note, that's probably not the case. So just know that going in, number one, right?
Yes. And I think it's important to know that this program in the CARE Act, when it comes to the forbearance, is, it's there for the people who are actually needing it, who the people where maybe they have two incomes and have lost, 70% of their income due to job loss, or even 100% of their income due to job loss. And they're not
Right.
sure how they're even going to, maintain their house right now. So there is a need for this, and this program has been added to the CARE Act for that need.
Right. Just don't jump into it lightly, right? Because what can happen at the end of this forbearance if all of a sudden you can't, as a homeowner, repay?
Right. We want to make sure, us as industry professionals, we want to make sure that that the information about what happens after and what the implications are if you do this, that all the decisions have been thought through, and that it's not just because the government has not done a very good job explaining this. They've just rolled it out without a plan. And so we want to make sure that you understand fully before you consider this as an option. With all the other options that are offered into the CARE Act, this is just one piece of this.
Right, because what happens? Let's say you can't repay it. What's the option? What does the servicer, what can they do?
Yeah, so forbearance is just a delayed payment. So if you're not able to make these payments under the terms that your servicer lays out, then they'll start foreclosure proceedings. So,
okay.
Foreclosure is something that we saw in 2008 that was devastated many families, and on top of that, is the reason for all the decreased values that we saw across the board. And so, the housing market is very strong right now, and people have a lot of equity, more so than they've ever had in the history of homeownership. The equity position is better.
So that's very different than what we saw in 2008 with all the foreclosures back then.
Right. The equity position was very thin due to different lending guidelines and things like that. But then when you had, negative amortization loans, which don't exist anymore, but negative amortization loans, people were actually losing equity in their homes based on the loans that they had. And so when, the crisis started, people they were underwater in their homes. We're not in that position right now. We're in a much healthier position right now. We just want to make sure that the information that is being delivered right now, that people realize, a year down the road, what this is going to look like, and to ensure that we're, exploring all those options.
Right. So there's other solutions aside from forbearance that people could consider, possibly, not everyone. Obviously, some people don't have a choice, but what other solutions might there be that people should look into if they?
Yeah. So, if you look at the CARE Act as a whole, there are several areas that are listed in them. Two that come to mind are, extended unemployment benefits. So, where unemployment benefits differ from person to person based on their salary or hourly position, there are some extended timeframes that they've added on to this, so you can take advantage of that. Additionally, with any, whether they be for employee-sponsored 401ks, or if you just have a traditional IRA retirement account, that the 10% early withdrawal fee is automatically waived right now. They've increased the limits that you can actually take out, and you also have a 3-year tax deferred on any taxes that you may owe on taking that money out as income. Because when you take out distributions from your IRA for something like this, it will get taxed as income, but there's a 3-year deferral on that.
Okay, great. So those might be a couple of things to look at before jumping into this forbearance route.
Yeah, so they don't have the credit implications that a forbearance would have as well, but it does, while it does change, as far as your investments and things like that, but it is a way for you to sort of borrow from yourself temporarily.
Right. Okay. Well, you mentioned, and I can definitely attest to this, we have a lot more equity in our homes right now than we did back in 2008. What about options for using that equity for some folks?
Yeah, so you
Cash
can
out
do cash.
refunds?
Yeah, you can do cash out refinance, and so you can just have no reason other than you just want to cash out of some of that equity. You can do that up to 80% of the value of the home, which we know values have been increasing year over year for quite some time now. So you may have more equity in your home than you realize. Where you get $20,000, $30,000, $40,000 out of your house now, rates are low, and they're going to be low for quite some time. So there's a good chance that you would even just be in the same mortgage amount that you're in right now by pulling more cash out from where you are. So, and then that gives you that little bit of a nest egg to use. And if you ended up not needing it, then you could just pay your mortgage back down.
Right. Now, I know in the past couple of years, a lot of people shortened the term of their loan. And so their monthly payments are a bit higher, and that's accelerating the equity they have in their home. Is there any option, instead of doing maybe a cash out refi, just maybe, going from a 15-year note to a 30-year note and kind of just spreading out those payments now? Would that be a good option for some folks maybe?
Yeah, of course. I mean, it to me, I'm a numbers person, so it's why I'm in the mortgage business. But I feel like just taking a look at the numbers, you may, as an example, on a $250,000 mortgage, if you went from a 30-year to a 20-year mortgage, and say the rates were the same, which typically they're similar. So in the same rate situation, a 20-year to 30-year, you'll probably see about a 30% increase in that mortgage payment, which would be about a 35% increase in your principal reduction. So whatever increase you see on a $250,000 mortgage in a 20-year note, that directly goes to the principal balance.
Okay. All right. Another thing that I'm seeing is, if there's some people who, have lived in their pie in the sky dream home for years, raised their children. Now the kids are gone and moved out and on their own with their own families. And, a lot of people have considered selling their home and taking advantage of a lot of this equity. And might be a really good time to do that, and get yourself into something that's a little more manageable on a monthly basis as far as the payments are concerned. Are you seeing a lot of that happening right now too?
Yeah, so consider that if you feel like you might see a loss of income or a reduction in income here in the future, right? Downsizing right now would make sense. You could take the equity that you have in your current home right now, get into a smaller square footage home like you're mentioning, but then also have a smaller mortgage on that downsized home. So therefore reducing your expenses as well. So it's a very viable option, especially if you're talking about rolling the equity over that you have in your home.
Right. Okay. So it sounds like there's quite a few other things for not everyone. Again, some people don't have a lot of options, but for some people, the forbearance might be kind of a last consideration, because there seems to be a lot of different things you can look at before going that route.
I think without a doubt, the forbearance should be a last resort option for anyone considering anything within the CARE Act. Now, we don't, again, want to assume that, if you both incomes have been, reduced to nothing, that, you're scared. And, it's really just about kind of taking a minute, taking a step back and looking at what all the implications are. And those, may be your only options, which is completely understandable, but we want to navigate or help navigate you through this.
Right.
As industry experts, we want to make sure that you have considered everything, and maybe there's one or two things that you hadn't thought of that would be better suited for you.
Absolutely. Absolutely. And so the for those people that absolutely have to go the forbearance route, and that is their best option for them, if they find that they're unable to pay that back in the future, instead of just letting your equity go and letting the bank foreclose on the property if you cannot repay at that time, selling the home is definitely an option. Getting that home sold so that you can take that equity that you've built for so many years, and then it also protect your credit, right? Now, talk a little bit about that, because foreclosure definitely affects your credit in a very negative way. what about forbearance? How is that going to affect credit, or do we know yet?
We don't know yet right now. So there are conversations that are being had as far as what this would mean when a forbearance. If you enter into forbearance, it will be noted on your credit report. And what we do know is that under certain loans, FHA being one, that the servicer must report you on a monthly basis as being on time on that mortgage. But forbearance note will be in there on your credit report. So what we don't know is what we call credit overlays, which are additional guidelines that are implemented at the origination side versus the servicing side. So these additional guidelines may be more strict. You may have a 24-month wait period before you can even apply for another mortgage. Those types of things are being talked about, but nothing is in place at this time.
All right. So there's a lot of questions still to be answered.
Yes, this is all still very new. It's very fluid.
This just came out this past Sunday, right?
A week ago
this
Sunday.
Past Sunday?
Okay. Yeah, a week ago Sunday. So we're all still learning a little bit. I just, as we've talked in the past, felt this was super important to at least try to get out and help guide you guys through this really scary time right now.
Right. Well, thank you so much, Tony. Really appreciate your time. And would it be okay if I put your information here in the post so that people can get in touch with you if they have questions?
Yeah, absolutely. Would love to spread the word to whoever is needing some advice. But thank you so much for having us on the call. And yeah.
Absolutely. Thank you. And maybe once we find out a little more information, we can have you back on.
Thanks. Bye.
Thanks.